All right, everybody. It is Wednesday, and we are coming to you live from Investing Education Academy. For everybody listening to the podcast, want to first say thank you. We are over 600 unique downloads per month, and that is pretty awesome. And for everybody who's been watching us, who's joined the Investment Education Academy group, the paid membership. For those of you all who are in the Investing Education Academy Facebook group, to everybody who just watches this live, and for those who listen to the podcast across the world, thank you. We are approaching our 1 year anniversary. Tomorrow, it's tomorrow, right, Leon?
Tomorrow, yeah. Yep. Mm-hmm.
So tomorrow will be 1 year of Investment Education Academy officially being in business, and we have some things for you. We're going to do some celebratory things, just to say thank you to those who have been watching from afar and been thinking maybe I'll get in, maybe I shouldn't get in. And for those of you all who have been wanting to upgrade your membership, just stay on the lookout. If you are not in our Facebook group, that's where it's going to start. So you want to take this moment to go to Facebook and search Investing Education Academy. Join our Facebook group. We are at roughly 400 members in there. The goal is by the end of the year to be over
425 to be exact.
425. And by the end of the year, our goal is to get to 600. So we definitely need your assistance with that. But it looks like we're headed that way. And if you are, again, somebody who's been watching from afar and you've been like, I want to get in, I don't know when to get in, we have something for you starting tomorrow. For those of you all who are already in and you've been thinking, I really want to, up my membership, it's happening now. And for those of you all who want to join the IE Crypto Bulls. So that's the one platform that is staying the same, because that cryptocurrency is, again, it's a bit of a different design with it. And we're up to, and correct me if I'm wrong, Leon, we're at like 15 members?
14 total.
14 total. And that means we have 10, 11 more spaces. So we have, I know, about 2 or 3 more people joining probably by the end of this week. So if you are interested, that will pretty much leave 9 spaces left for the IEA Crypto Bulls. So if you're interested in learning more about cryptocurrency, see what we're trading, how we're trading, participate in a mastermind of individuals who are investing in cryptocurrency and mining. We're actually mining in the group. Leon is our chief miner. So he is by far leading the group in his mining efforts. But if you've always wondered about mining, you can do it with something as simple as your phone. But in order to do it, you need to join so we can tell you how. And Leon, while you tell everybody the topic for today, I'm going to do a little bit of housekeeping.
Okay, so the topic today, so last week, anybody who's watching or who may have missed it, we did the top 5 sectors through the first 6 months of 2021. And so today we're going to cover the top 5 stocks through the first 6 months of 2021.
And the S&P 500.
Oh, sorry. Yes. Yeah. So so last week we did the top 5 sectors, which covers, pretty much all the stocks in the market. This week we're covering the top 5 stocks that returned the most through the first 6 months of the year that are inside the S&P 500. The reason we're doing that is because if we did every stock, that's in the universe of like almost 8,000 stocks, there are a lot of penny stocks. There's basically a lot of BS out there. You have stocks that are up like 6,000-7,000% that are like 1 penny or less than 1 penny that have gone to like maybe half a penny to like a full penny now, or from 1 penny to like 10 pennies. So we kind of want to eliminate that whole world of penny stocks. And so we're doing the top five highest returning stocks in the S&P 500, because these are the biggest and the baddest in the United States. And you also, so anybody who either watched last week or we encourage you to go back and watch, you'll see that the top 3 of the top 5 sectors, 2 of the top 5 sectors were the energy sectors. Number 1 was energy explorers, and number 3 was energy in general. And what we're going to see today is that energy is dominated because the top sectors are energy. You're going to see today the top 3 of the top five stocks, highest returning stocks through the first 6 months of the year are energy stocks. And it's a good lesson to show that, like we always say, like, look, invest in the top industry sectors, industries, then stocks. And what this shows that last week, again, we showed energy has ruled 2021. And with that, of course, underlying the sector, of course, are individual stocks. You're going to see today that the top three of the top five stocks so far in 2021 are energy stocks. Because again, the energy sector is leading. So of course, energy stocks are going to lead. This is why we always say it's best to look at the sector, look at the industry, and then look at the stocks, because that will show you where the leadership in the market is.
Yep. And for everybody who's again watching, tomorrow is our 1 year anniversary. So that's huge. And I see people popping on right now. Want to give a couple shout outs. Now, normally we won't do this, but it is, we'd be remiss if we didn't recognize some people who have just been soldiers with us as regards to the first year, because Leon and I were figuring it out. I think we started off in t-shirts, right?
Yeah, t-shirts, hoodies. We started out in the middle of the pandemic. Didn't know what the hell we were doing. We were like, F it, we've always talked about it, let's just go and make it happen. And a year later, we're here.
Yeah, we started, the reason we started, this is gonna veer off a little bit, but I think it's important. We started Investing Education Academy because Leon and I were already investing. And we've been investing since we were 16. When the pandemic hit, so many of our friends started coming to us, just asking us questions. And we wanted everybody to know really what was going on. But we didn't have the capacity to talk to everybody that was starting to contact us. We've already been reasonably successful as investors. And, I even showed one of the accounts this morning. And, there's a lot of people that talk about it. Then there's other people who actually are doing it. And then there's people who are doing it and they'll show you. So if you're in Investing Education Academy, number one, if you're an insider, I've taken the hot seat. Like, you've seen my actual portfolio. I think I showed two. One that was 7 years old, one that was 2 years old. And you saw firsthand what the return was. It was over 600% rate of return. And so in one of them, the other one was, I think it might have been like 92, and it was a 2-year-old account. But, we're showing you all this stuff, not to show you like, oh yeah, we're killing it. Because not all of our stocks, we show you the ones, I personally, again, showed you a stock I had that went to zero. So there's some losers in there. And, we do this because we want you all to know investing should be normal. And, again, wanted to go back to that list of shout outs. Phaedra, you celebrated your birthday with us. You trusted us to get started. You really weren't even investing beforehand, and you trusted us to get into the stock market and for us to give you some guidance. We really appreciate you for it. Matisse, you have been on every live that we've had, and we see you, we recognize that. And you always comment when you can. Definitely appreciate that. We talked earlier today, so, glad to see you on here now. Madeline, you boosted us as much as anybody could boost. You were our Facebook booster. And Madison, I think one time we took a live, it was like 2,500 views by the time we were done, because I don't even know what you did, but it was
yeah. Our normal back then was like 200 or 300 by the time we finished. Yes. And it was like 10 times that. Yeah.
And we have to say Attorney Henderson, again, those people who are over 70 and they're trusting us to, guide them through their first time investing. Again, like over 70, and they're trusting us. This is the place they come to and feel comfortable investing and learning. And these are attorneys. These aren't like people that aren't professional. Like these, and just because you're in a particular field doesn't mean you can't learn. And Leon and I, we've learned from many of you all. Definitely want to give a shout out to Nick. It's not often you get a millionaire who's willing to show you their portfolio. And so if you are in Investing Education Academy, we saw his portfolio. We saw $1 million portfolio and how it was created. And we played a major role in that happening. And, then we can't even, our Panthers, like the people who trusted us coming into this, it's a $5,000 membership annual. And, I'm going to try to name everybody in the Panthers. So if I miss it, this is on the spot. So this was unscripted. So we're going to thank Carla, And I'm gonna tell you who these people are. She's an eye surgeon out of Florida. I think it's important to know. Her first time investing was with Education Academy. Then we have Joyce Sistrunk, runs a multi-million-dollar CPA firm out of Atlanta, Maryland. First time investing was with Investing Education Academy. Then we have Nick, is now a Panther.
Nick is our resident millionaire.
Yeah, and actually it's more than that, but we say that about Nick because we made that happen. So right. we can have some ownership of that. So but it's probably about 4 millionaires in the Panther group, and there's at least 12 millionaires throughout Investing Education Academy. So then we also have Beverly, attorney Beverly Winstead, and not only is Beverly a Panther, she's a tax attorney, number one. She was one of the top 40 under 40 attorneys in the nation in 2018. And that's huge within itself. But Beverly she's just an integral part to Investing in Education Academy. Not only does she show up whenever she can for our lives, but in addition to that, when we finished our meetings, she would critique us, and she would tell us what we did right and what we did wrong. And that's not a bad thing. That's actually a very good thing, that you have honest people like that in your ecosystem that you trust. And also they're going to see your blind spots. Leon and I have never said that we are somehow sitting on this mountain and we don't have blind spots. We wouldn't have made it 12 months without people like that. So then we have, who else, Leon?
We got Attorney Henderson.
Attorney Henderson, yes. 70 plus estate planning attorney. First time investing was with us. And she got me started in my business consulting career. So that was really cool to see, some of the Bold Vision clients coming back over for Investing Education Academy. Who else we had?
Let me get the list.
Yes, and then we're going to talk about some people from Canada.
Barbara.
Oh, Barbara, another attorney. We got a lot of attorneys in that group.
Yeah, we do got a lot of attorneys.
So Barbara is not only somebody who joined Investing in Education Academy, she became a Panther. And again, we're talking about a membership that's 5,000 plus. And when we get, right now we're at nine Panthers, I want to say. When we get to 15, we're shutting down the group. And when we relaunch it, membership is going to be $10,000 per person. We invest together, private equity deals, land deals. People are pitching to us, so we're getting involved in venture capital. We have people pitching real estate deals to us, so we're getting into that real estate game. And then we're looking at some of the private equity deals deal with energy, they deal with cleaning, trucks. We have exchange.
A stock exchange. Mm-hmm.
Yeah, so I mean, essentially what we're doing right now, and then there is
Hassan
is he's out of Serbia. And so, he trusted us to, get him into the market. A few years ago, we had that first conversation with Hassan. You're talking about a person that has over, I want to say 120% rate of return as a result of working with us. So that's a win. Is that it? Did I miss anybody?
The list I tried to pull up, I could not get it here. So
I think that's, if we forget anybody, blaming on our minds, not our hearts.
Right. Right.
But also too, I just want to say some people, Cunley is very active in our IEA members platform. And then I want to recognize Kenya has put a couple comments up inside the Facebook group. And then it's a couple people, but the reason we're taking this time to actually say the names of people, normally you don't want to do that when you're talking, because people are like, well, I'm checking out because they're not talking about money. For Leon and I, it's important to recognize the people in our ecosystem that are showing up. Malcolm is always putting amazing content into the platform and, sharing it with everybody, giving any type of nugget he has and putting up comments and challenging thoughts. And we get challenged a lot inside of the IEA platform. And that's great because we challenge people as well. So, coming into this, first year anniversary, you're going to see a lot of changes inside of Investing Education Academy. And our changes are going to be designed for the betterment of our community. And we're going to start figuring out how we can funnel more opportunities and just more money, let's just call it what it is, to the members in the community while also making more money for the company. So whatever we do, we want it to be mutually beneficial to those in our ecosystem, because that's where we're headed. And I see people talking about retiring early and the such. Oh, my mom just started watching. So hello, mother.
Hello, Mom.
So again, thank you, Mom. Without you, none of this. That's the
Exactly.
word.
None of this would be.
Thing.
Yeah, right.
So without you, mother, none of this would have been possible. But we're talking about our 1-year anniversary because in the people in our ecosystem, people are very important to Leon and I. That is the reason we started Investing Education Academy. We're going to talk about the money today, and we're going to talk about the S&P 500. But we want you all to know we see you, we recognize you, we appreciate you being in our ecosystem. We are going to continue to get better so we can serve you better. And we're open to comments. If you have comments, drop them in. Anything you want to say, drop it in. I can see the comments now. Feel free to share this with somebody because we're losing. As a community, we're losing. And, I still know people who have savings accounts and they feel safe in their savings account. And Leon, I know you want to tell your stat. It's like, okay, you want to do the number of years it takes?
So just repeat. The average savings account interest rate in this country right now is 0.05%. And the math I did, I think it turned out to be like either 1,400 or 1,700 years it would take for your money to double at that return. So if your money's sitting in a savings account right now, and again, that's on average, some people making more, some people making less. But 0.05%, if you're earning that or anywhere near that, you're losing money every day, because right now with the pandemic, inflation is approaching it's typically 2 to 3% per year. This year and last year is more like 5 to 10%. So your money is being decimated if it's sitting inside of a savings account right now. That's one of our pet peeves that we do not want anyone in our ecosystem to have. Now, we get it. Everyone needs a rainy day fund, a savings account for things that may come up. But we say investment dollars should not be sitting in a savings account.
Yeah. And for those of you all who have 401ks, 403bs, 457 plans, TSPs, and the such, and the retirement accounts that you have at work, or you have them, through maybe you're an entrepreneur and you have your own setup, be sure to look at what you're invested in. We meet so many people who have retirement accounts at their job. They have never, and I mean 20, 30 years at the job, they have never looked at their allocation. And the allocation being what their money is invested in. They have no idea. And they just think because they have it, that's their retirement account. And we have opened up some people's statements with them or read them with them, and they have everything inside of a bond fund. And we're like, that is like the least performing asset class you could have in this whole 401k. So if you all are watching this and you have a 401k, if you are listening to the podcast and you have a 401k, I challenge you to say, what is your money invested in?
And I'll just give a quick story. So a member of IEA, I'm not gonna say names, but I went over her 401k with her, and it turned out she was getting, as we always say, and this is fact, the stock market on average returns 10% per year on average. Her 401k was getting like 4 and 5%. So her 401k wasn't even keeping up with the market. And that's because, as Brent said, most of her 401k was in bonds. Now she's about 20 to 25 years from retirement. So she has half of a lifetime till she retires. So there's no way in the world she should be earning half of what the general market returns. And like Brent said, yes, definitely look at your 401ks and see what the returns you're getting, what the allocation is. Because if you have 25, 30 years to retirement, there is no way you should be earning less or half of what the general stock market returns. That is ridiculous. But they do it. These companies do it because they're getting fees, and two, they don't want to give themselves any risk parameters. So they'll put you in a bond fund. They'll put you, they'll allocate you maybe 60-40 bonds or 70-30 bonds to stocks because they know it's safe and that they don't have much risk. But you're not getting anywhere near the 10% of what the market returns on average. And again, that's the market. Stocks return 10, 20, 30, 40 times that. So like Brent said, definitely look at your allocation, your 401ks, because like when I saw her allocation, I saw her returns of 5 and 6% in her 401k the past couple of years. I was appalled, frank.
And stop thinking life insurance is like a bad word. Life insurance is going to save some people's legacies. You know, thinking, oh, I have everything at work. We see what happened in COVID. People were getting sick and then they were losing their jobs and then they were dying. And so all the insurance they had at work wasn't even relevant in the end. Life insurance is the one thing. They say taxes, but you can duck taxes. You might go to jail. You cannot hide from death. You can't. And we're not thinking about it as a way to pass on money. We're thinking about it as this thing just not to talk about, this taboo event of life, and we just had to change it. So, you know, that's Leon and I's rant for today.
Just real quick, one other thing is, like you said, COVID for life insurance, but also look what happened in Florida with that building that collapsed, that condo. Fluke, right? Totally fluke, totally random. And if those people did not have life insurance, you know, what happens to their assets now? What happens to their kids? What happens to their grandkids? So COVID was a total black swan event, and that thing that happened in Florida was a black swan event. These things you can't prepare for, but you know, as long as you have that life insurance in place, you know, your family can be fine.
Yep. And you know, if you need help with that, Leon and I can help you. If you need to understand finances better, this is why we created Investing Education Academy. And I want to say this was disheartening, and it's just me just telling the truth. I put out today that I had an account that returned somewhere about 124% rate of return. And in 2 years, so that's about 60% rate of return per year. People commented, few people commented. No one asked me what was in the account. I couldn't believe it. Like I thought somebody would have asked me what was in the account. Nobody asked me what was in the account. I'm not even saying I would have told them, but it's just the fact that it wasn't even a question. We got to change the way we think. We have to change the way we think. Like when we see these opportunities to learn, we need to take advantage of them. We absolutely got to take advantage. Leon had a meeting with somebody whose portfolio is returning like somewhere north of 100+% rate of return. It ended up just being a conversation between Leon and this individual. Nobody showed up. And some of these people are paying for membership. You have to show up. Now, granted, people are going back watching the replay.
Yeah, I'll say, yeah.
So
inside IA, they can go back and watch the replay.
Yeah.
But our thing is like, you have a millionaire who's going to show you his portfolio, show you what he's working with, show you how he's done it. And people are very complacent. Now, we get it. You know, the replay is there for the IA members to watch. But we look at it like, you know, how many people in this world can say they can sit down with a millionaire? And remember, and these things are interactive, right? So members that do show up, they can ask questions. Of course, when you watch the replay, you can't. So to ask a millionaire questions about what he did, his trials and tribulations, what he went through, his growing pains, all that was available. And people chose to just watch the replay, which is fine. We're not knocking it. But we're just saying, like, look, you got to take advantage of these opportunities that are presented to you to then learn and know how you can grow your own money. It's very, very important.
Yeah. Every dollar you get can be an employee if you put it to work.
Yep. You got to put it to work. Yep.
So, I mean, with that being said, thank you everybody for helping us get to this 1 year. We're going to dive into this S&P 500 topic. And so let me pull it up.
Yeah, we're going to make this quick. So we have a slide up here, and this is these are the top performing stocks within the S&P 500 through yesterday. So basically through the first 6 months of the year. Now, what we did last week is we showed the top 5 performing sectors, and 2 of the 5 were the energy sectors. One was energy miners, the guys who actually go into the caves and mine for oil and natural gas. And the other one was, number 3 was just energy in general, like the BPs, Exxons, Shells of the world. So now those are the sectors. Now what we have here is we have the 5 top stocks, the 5 top performing stocks through 6 months of 2021. The first one is MRO, and it's a ticker symbol. So real quick, anybody who's watching this, these 3 or 4 letters are the ticker symbols. So we didn't have enough room to actually put the name of the company, so we just put the ticker symbol. So you just drop.
For anybody who's listening, these are top performing stocks for the first 6 months of the year 2021. Again, if somebody's listening to the podcast, they may not know what year it's for. But the ticker symbol, to piggyback on what Leon's saying, that's used to look up the stock. So if you go to your brokerage account, be it Robinhood, E-Trade, Ameritrade, TD Warehouse, whatever it might be, you want to put in the MRO, and it's going to populate the information for this particular stock. And then you can go move forward and buy it or sell it or research it to see if it makes sense for your portfolio.
Yep. So the first, and also another point, these are the top performing stocks within the S&P 500. As I said earlier, we didn't do the whole universe of stocks, which is like 8,000 stocks, because there's a lot of penny stocks in there, and some of them are up at like, they're up 3,000-4,000%. But it's not really realistic because, again, they're penny stocks and they're moving, the percentage gains are so big relative to the price of stocks. So to eliminate that, we just did the S&P 500.
And Leon, can you tell what the benefit or downfall really is how I see it, but can you talk about the benefit, downfall of investing in penny stocks?
Yeah. So, I mean, I used to do that. I used to trade them. And so the benefit is, if you're dealing with something that trades at less than a penny, right? Or even let's just say a penny. If a stock goes from 1 penny to 2 penny, you just made 100% on your money, right? If a stock goes from 1 penny to half a penny, you just lost 50% on your money. These penny stocks move very, very small increments, but those increments are huge percentage moves. So if you drop $1,000 in one of these penny stocks and it goes down, 1 cent, and you're trading a 2-cent stock, a 2-cent penny stock, you just lost 50% of your money like that, right? So, but also, of course, the flip side, what people see is that they see, oh, if I invest in a 1 cent stock and it goes up to 2 cents, I just made 100% of my money. True, but it works the other way too. If it goes down, 1 cent or half a cent or whatever, you're going to lose 60, 70, 80% of your money like that also. So penny stocks are very, very risky. They're typically very, very volatile. I mean, you have penny stocks that, 5 cents drop down to 2 cents, then go up to like 8 cents. So it's just, type of things you can't sleep at night. So to get rid of that phenomenon, we just eliminated that. We went to S&P 500 for this slide to show the top performing stocks within the S&P 500 through the first 6 months of this year. And the first one is, the ticker symbol is MRO, and the name of the company is Marathon Oil. Marathon Oil is up 95% through the first 6 months of the year. And again, anyone who watched the one last week understands why, because the top performing sector through the first 6 months of the year is energy, right? So that makes sense that the top performing individual stock, is energy company. Number 2 is FANG. The ticker symbol is FANG. And this is not like, some people get this confused with like the term FANG for Facebook, Amazon, Netflix, and Google. That's not this. This company's name is Diamondback Energy. Again, FANG, Diamondback Energy. Again, another energy stock, because again, the top sector through the first 6 months is energy. The number 2 highest return stock is FANG. Diamondback Energy up 90% through the first 6 months of the year. Number 3 is a company called Generac. They make power systems. Ticker symbol is GNRC. That's up 82.5% through the first 6 months of the year. The 4th one is Occidental Petroleum. Again, another energy stock, which is up 80% through the first 6 months of the year. And the last one is a retailer, L Brands. Ticker symbol LB is also up 80% through the first 6 months of the year. So these are the top 5 best performing stocks in the S&P 500 through the first 6 months of this year. If you want to look into any of these, have at it. They are. I mean, you can't look down these returns. The least returning stock here is 80% through the first 6 months of the year. Does that mean that they return this much through the last 6 months? No. I would almost bet that these will not be up this much through the second half of the year. They may be up around this much, but I would imagine they'll give back some. Again, I don't know. But these are the best performing stocks in the S&P 500 through the first 6 months of the year. And I'll say it again. The reason that three of the 5 of these are energy stocks is because the top performing sector through the first 6 months of the year is the energy sector. And that's why we always say, look at the sector first, then the industry, then the stock, because the sector will tell you where the top performing sectors will point you in the direction of the top performing stocks. So that's that's the top 5 performing stocks through the first 6 months of the year in the S&P 500.
All right. So everybody, we owe you 2 stock picks, and you can find those stock picks in our Facebook group. So you can go to Investing Education Academy, search it inside of Facebook, and you will find our group, and you will find our stock picks. And we have 2 doozies for you today. So I hope you do make it over to the Facebook group and see what we picked. So our choices will be located there. Everybody, thank you very much. We're growing, the community, our ecosystem's over 700 plus strong. And, this started just 12 months ago. So you will see some of our advertising coming up, and we're starting to really kind of push the community now. Everything was organic really up until this point. So look for us and, look to see what we're doing. You have questions about your portfolio. If you want to talk about what investing is a little more in detail with Leon and I, we do have a fee, but you can talk to us. So, all these things is changing. Please change your mind about money and change your relationship with money. And if you have a savings account, stop it. Figure out a way to get your money invested. Don't invest monies like true emergency money, but anything beyond necessary money should be working for you. And especially in this day and age, you can get most of the funds that you need back within a 1 week period. So everybody enjoy the rest of your evening. We will see you all next week. For our 2 stop picks, go over to Investing Education Academy, our Facebook group, and you will find them. Have a good day.